Hey everyone, welcome back to another market closing live stream. So let's take a peek at what we got going on over here. We've got, kind of a mixed bag of a market, but really more red than green. We've got pretty much stability here in things like Affirm, Matterport, Piton. Just put out a video on 5 stocks to watch. Some to watch, some not to watch. My opinions, obviously. Check those out if you have not seen that yet. But in the meantime, let's take a look at some of this red here, because what I really want to understand here, oh wow, look at that. Hippo really just rotated to the downside. It's down about 21%. That's insane. That's a big rotation out here. Support, a large rotation, about 17% out. I still hold my Hippo. Marathon is down 8%. Rocket Lab down 11%. My goodness. Sell puts on Hippo are going to be amazing right now. I actually might, hold on a second. This is a crazy. What happened? It's selling into the close. A lot of volume came in over here on Hippo into the close. That's interesting. I wonder. Let's see here. Let's go for Oct and Oct call for. What did we have before? Trying to remember what I did before. Oh, well, I guess, no. Hold on a sec. Let's see here. This is Hippo. Hippo, yeah, 100. Let's see here. I want to explore a Hippo option here. Hippo 250 times 100. 25 times 100, $250K, $250,000. Yeah, that's not this much. Sorry, times. Hold on, 250 quantity, 100 times $4. There we go, 100K. Yeah, I'm gonna buy these. I'm buying this right now. That is I'm buying this call. Oh, sorry. Duh, it's supposed to be a buy. There we go. Good thing it caught me on that. Boom. I'm buying a call. I don't know why people say I sold my Hippo shares. I did not. It's, I send alerts anytime I buy or sell. I still have all my Hippo, and I just bought a call on this because I believe in Hippo. So I will show you my Hippo. Let's see here. Here we go. Okay. So Hippo. Take a look at that. Hold on. Okay. Here. So it looks like Hippo has a little bit of pain. So what I'm doing right now is I just bought a call option. I'll show you what I just bought. Oh, why is it tiny? Hold on. Why is it so tiny? Oh, that's so weird. No, that's my camera. That's so weird. Why does it do that? Hold on. What if I do? I want to show you this. So I just bought an option on this. Let me send the alert really quickly, though. That is a good drop. Trades. Buying Hippo call right now. For OC 15 2021 $4. All right, that's a crazy drop. I'm taking advantage of that right away. So how does it let me show my picture? Does that work? There we go. That's better. So this is my Weeble just now. So you just saw me buy that call option. And you can see I still have my shares right here. I have 100,000 shares. I have a sold call, and I just bought I have a sold call for $750, and I just bought a $4 call on Hippo. I am absolutely taking advantage of that. That is a beautiful dip. That is a great dip on a red day. I love that. So thank you for that opportunity. Hell yeah. Okay, good. So let's see what's going on here. Why is the market all of a sudden so fussy? Yeah, look at this. It's like the broader market just took a little bit of a poopy doopy here. Look at that. S&P slip brings it closer to key level for investors, down 66 per 0.66 on Dow. Wow, this is an acceleration here. These are some losses. Wow. Yeah, no, this is Friday sell-off worsens. Yikes. Okay, so we've got a bigger kind of movement here. But yeah, no, look, I believe in Hippo. That's why I still own the shares. I'm not looking to trade this thing. I've got a sold call at 750, which is again doing very well. And I just bought a call option for $4 on it because this is a crazy, crazy drop. Wait, why did Webull close? Well, let's reopen this. All right, here we go. So perfect. Okay. Yeah, anyway, that is a crazy, crazy drop. But no, that is a dip opportunity for me. Look at that. That's a low of the day where we just bought this. So I absolutely picked up on an option on that. I send an alert to as usual. Sorry, usually the live streams start differently because I don't get distracted by buying something. But as usual, anytime I buy or sell something, I immediately send an alert. Yeah, no, I'm not leaving. I've been very transparent. You know, people are funny. People like I think sometimes people in the comments are like, "Oh, Kevin, you're shorting AMC." Like, no, I'm not. Or people are like, "Oh, Kevin, you're just gonna dump Hippo." It's like, no, still have all the shares. Been very transparent with my intentions. I think I've explained a million times what I think about fair value versus good value versus stretchy value versus overvalued, right? I think people get emotional in the stock market. Really? Duh. But anyway, wow, that is a good dip. You know, and I was watching the dip on Cardano this morning. I didn't buy this morning. I was really, really tempted to buy this morning because it was while I was dropping I don't know what it is, but every time I drop the kids off at school, you've got crypto dropping. And I don't always go drop the kids off at school. So like the last time I dropped the kids off at school, it was 3 days ago here on the 7th. We had that same crisis on the 7th, like kind of like today. It's so weird. But anyway, yeah, I didn't add to this dip, and that's specifically because I added to some other stocks instead. And I added to the dip last time. But if we get a lower dip where I could lower sort of my recent purchase, I'm down to buy that. So I've got a what's it called when the trigger's like really sensitive, a hair trigger. Yeah, I've got that for crypto right now. I really don't believe Matterport's going to hold at 19 because I want to own Matterport for the long run. It's one of my faves, but being a SPAC, I think SPACs are just going to get anchored anytime we have uncertainty in the market. And so I think there'll be a new opportunity to buy. I've made some really good money swinging that one. And some people are like, wait, wasn't that like a fundamental long? It was until about April 20th when I was looking at my portfolio, like, how can I get out of margin? And I went to swinging Matterport by reducing my position and then pulling more profit. So that way I had no margin. And that was one of the stocks. Matterport, Lucid. I moved a lot of stocks I moved some Tesla to options, moved a lot of things over to options. Some of the options printed massive tendies. Tesla ones, some of them are up, some of them are down. So I still got some work to do on Tesla, but that's okay. They're 2023s. So support.com is down 18%. That's cray. Yeah, you've got really an evaporation of sort of momentum here. Personally, I believe that this you're going to be in a situation where, holy crap, what happened? Oh my gosh, look at this. The call I just bought on Hippo. Look at the call I just bought. I just bought it for $40,000. It's up 15 grand. Dude, that was like 5 minutes. Anyway, I'm holding this. I'm gonna hold this one. I don't need to trade this one right away because I honestly like let this stock run back to $7. I'll ride that option for that. And it's in the money at $4. So it's like, okay, worst case scenario, just paid to buy the shares at a discount anyway. I paid 161. So $4 plus 161, that's like paying 561 for it. Like that's totally reasonable. That's fair for Hippo. So another thing I really want to do is over here, I sold puts on AMC, which I think was really great because it gave me, let's see, I mean, I obviously had I just done the call option instead of the sold puts, they'd be up way more than 5% right now. But I sold a put on AMC to where if it sells for under $40 all the way out to 2023, I will buy $80,000 more worth. And that gave me a $40,700 credit. That was really nice too. So I really like the volatility on that. Now, if I weren't covered, I don't, you know, we're at this harsh resistance here. I hope we break through this. If we break through this, my covered call is going to hurt a little bit, but it's not that big of a covered call. It was 20 grand. So I'm really watching this because the trend is just remarkable for AMC right now. So I'm very happy for AMC. National Bev. So something changed here at Nat Bev. All of a sudden, Fizz is doing very well. I'm going to pull up the Bloomberg terminal to figure out exactly what's going on here. We also have this news regarding Apple, where Apple kind of had a loss in court, even though it really didn't have a loss in court. It had a loss in court, and essentially, companies can now say, "Hey, if you want to buy it through Apple." Like your service through Apple or whatever, then it's going to cost you, let's say, $12. And oh yeah, here we go. Yeah. Oh, you know, let's do a more thorough clip on this. Give me a second here because it's actually front page news on Bloomberg right now. Mm-hmm. Okay. Okay. Let's see. Well, here we go. So we'll talk more about Apple in just a second because that to me was definitely some news that I want to pay attention to. It's unfortunate for Apple because I really like Apple. I think Apple's kind of weighing down the index today, helping lead to this Friday sell-off. If Apple ceased to exist, I think you mean the stock market, but I know what you mean. Yeah, the stock market would drop 3%. It's crazy. All right, there we go. Bloomberg terminals pulling up. It's like Bloomberg terminals like an old diesel. You got to let the glow plugs warm up before you start it.
North America during the second half of the year, although
GM's been getting destroyed. I mean, a lot of the car companies have been. Okay, so let me hop on into terminal here. I want to figure out what's going on with Fizz. And again, I just want to be clear. I saw Hippo dip. I just bought a 35-day call option on it at the dip. I think it's ridiculous that it's dipping. I think it's just part of this like Friday blues or something like that. I thought that was a Monday thing. All right, whatever. Okay, so Fizz. Close, Fizz. SnapBev. Okay, individual company news. Let's see what the news is. I'm allowed to share news. So rally after Q1 earnings beat. NatBev jumps after earnings beat 4.7%. Okay, well, it's up more than that, obviously, now. When did they post earnings? Oh, this morning. Higher fiscal Q1 profit. Oh, okay. Yeah, look at that. National Beverage EPS 0.58 cents, up from 55 year over year. Sales 311 mil, up from 293 year over year. Nice. Awesome. All right, so that's interesting to me. This a firm running into the close a little bit here is shocking to me. I really think that's because there's a lot of speculation and momentum on a firm right now, and I don't blame it. It's a great freaking company. Love this company, but boy, oh boy, we're starting to get pretty rich here. $31 billion market cap for a firm. I don't know. I mean, y'all know I'm obviously very bullish on the company. You've seen me talk about that before. We'll talk about Apple as well. Probably right after the bell, we'll talk about Apple. I think that'll make more sense. Then we'll have more time. We won't get interrupted. But there it is. So we'll talk about Apple and the Apple ruling in just a little bit here. Stocks decline amid mixed messages. Yeah, you don't say. Let's see what mixed messages we have today. I don't think the vaccine mandate's really going to affect the market. Thank you for asking. Okay, so, oh, I forgot my coffee. I just made some coffee too, and I forgot it. U.S. equity is headed for, oh, actually. Okay, there we go. All right. U.S. equities headed for the biggest weekly decline since mid-June. Volatile trading as investors assess the latest read on the economy after more strategists weighed cautious comments on the markets. So this kind of like cautious tone from the market has been something we've seen all week. Like, in fact, we started Tuesday out with multiple headline stories from Bloomberg and other places saying, "Oh, the market is not as strong as we think fundamentally anymore. We think the market's weakening." And really, we've had a lot of FUD So I'm really trying to get my head around, is it just pessimism in the market, or are there actually like issues? I don't fully understand. Thanks, man. Appreciate it. Look at that. Shout out to Gabe. Thank you. Got my coffee. Okay, cool. So it does make me wonder, is it more like fundamental or is it fuddish? Personally, I think it's fuddish. I mean, I bought a few stocks today. I made a video earlier on the 5 stocks to buy. I threw a few $100,000 into those. And you know, I go through these phases. Like sometimes I go through these moments where I'm not buying a lot of stocks at all. I'm buying nothing for 3-4 weeks because I'm not seeing opportunities. And then sometimes I see great opportunities, and those have been some of the opportunities we've seen recently. Hippo obviously has done extremely well from when we bought. Affirm has done extremely well from when we bought. The Dave and Buster's play was amazing. There were obviously some mistakes along the way. Like I shouldn't have hedged my Affirm position. You know, I did. Oh well. You know, sometimes you look at your stocks and it's like, oh, I should hedge this just in case, right? And this is why I think hedge funds don't do too well, because I rarely do that. Actually, I've never done a hedge the way I did this last time on a firm. Maybe there's a reason for it why hedge funds suck. But anyway, yeah. Look, we have had some great momentum here in the last couple of weeks. It's been very interesting. We've really come out of this hole of the middle of August, but almost very fuddish and lower enthusiasm. All right, so we have 1 minute to the closing bell. Quickly, we're going to talk about Apple in just a moment. Markets have been volatile as the continued spread of COVID-19 has undermined the recovery. It makes sense, but I don't know how we could look at COVID cases in just a moment. It's basically COVID and Apple right now. COVID cases. What do I got? 30 seconds until the closing bell. COVID cases. Let's see how our trends are going. And we'll get the bell and we'll see how things closed out. Okay, we have yeah, I mean, we're flat essentially. A little inflection point down here, but that inflection point was really because of Labor Day. We were off.
Led down the most by utilities, materials holding up the best, and every sector for the week is lower on the S&P 500, with some declines of more than 1% for pretty much every sector except for consumer discretionary. Real estate, the hardest hit on the week, down 4%, but still an outperformer for the year. Overall, the market is going to go out with a loss 5 days in a row down for the Dow. S&P 500 down 1.7% on the week. The Dow is down a little more than 2%, right. And the Nasdaq.
Sorry about that. I just refreshed. If that ever happens, I come right back. Hopefully that's better.
Just then was the fire and police departments of
Bagpipe. Oh, that's right. It's 9/11.
To commemorate, of course, the 20th anniversary of 9/11.
That's so sad.
The bagpipers performing God Bless.
All right, folks. Let's go ahead and take a peek here at what's going on in the stock market. All right, so Affirm ended up 34.37%. Really incredible, absolutely incredible. I wish the best for Affirm. I think next week has the real potential of seeing a consolidation in the stock, which would be, in my opinion, a great opportunity to buy the dip. If it runs away, it runs away. We've got our position established already to where I'd be satisfied. If it runs, it runs. Then we've got, let's see, what do we have here? We've got SunPower. In the after hours, SunPower up 1.83%. Well, it's up what it's down today. See, I actually bought the dip on SunPower today, and we bought Hippo, more Hippo, Robinhood. I've got covered calls that expire September 17th, which is great. That's in a week. Some covered calls that expire there, so that'll be free money. Of course, it doesn't mean the stock has gone down too, which okay. That's part of the game. Matterport down slightly in the after hours. It only ended up 7% today. It was really rallying at one point. It was like 12 or 13% up. Really pulled back down off of the price upgrade to $20. And don't get me wrong, love Matterport. It's one of my top 5 stocks to watch. It's a stock I love. Big respect for the company. We have Wayfair. Wayfair is bleeding out. And what's fascinating about Wayfair is Wayfair, in my opinion, is very much like, well, Wayfair, how many times has Wayfair done this? Like, who has been in this live stream before where I've said, hey, look, Wayfair is doing it again. It's going under 300 and then over 300. Like, look at this. It just does it over and over and over again. And I usually make money on the way up on these. So I am going to jump on making a note for Monday to potentially maybe buy an option on this. Maybe. I'm not sure. It depends. If it's down more, I won't. I might wait. But that would be a consideration, Wayfair, for Monday. So I'll keep an eye on that. Obviously, if I do it, I will. You know, what's it called? Send an alert to all those of you in Stocks and Psychology. Oh, which remember, if you want to get a free $70 with Public or up to free $70 with Public, make sure to go to metkevin.com/public. Get free stock worth all the way up to $70. Link down below, or just go to metkevin.com/public. Sign up. You can follow me there at MeetKevin and check it out. Public will give you a free stock. They do not have payment for order flow. Let's take a look at some of the other damage here before we talk about Apple, because I do want to get into my comments on Apple. We've got Rocket Lab with a lot of recent momentum was down today, right? A lot of recent momentum. Upstart, Clover, Rocket Lab, Jivo, Hippo, support. I do think that Hippo under $6 is something that I'm willing to buy. That's why when I opened up the live stream and I saw this thing was like at one point down 22%, I'm like, instantly. I mean, you saw it. There's no reaction time at all or delay at all. It's just like, yeah, I will buy that. So, you know, these are like, those are sort of the mental things that I like to try to teach myself to always internalize, that, you know, you have price targets and you have ranges that you're willing to buy within or not. And yeah, let's see here. Okay, right. So let's see here. Affirm, for example, is above that range. $33 million market cap. Billion dollar market cap. A little too soon. Okay, we ended up Matterport 7%, Piton 7%. On the clothing, I think that was a little much of a move. GM. I hope GM comes back. You know, I want GM and their crews to do well. That's not to say I don't want Tesla to do well. Don't get me wrong. It doesn't have to be mutually exclusive. But I really want to do extremely well here. Thank you for the $9.99 donation about LAUSD vaccine mandate for kids and how do I feel about it. You know, I send my children to private school because I think the schools in California suck. And I feel bad for anybody who can't send their children to private school. I'm very transparent about that. I think our schools are horrible. I think our schools should have massive investments from the government. And it's unfair to children that we have a governor who doesn't seem to care about our schools. Regarding the mandate, I mean, I get both sides. I also understand that it's kind of funky that you can still spread COVID, you know, vaccinated. I'm blown away that they don't have ventilation requirements. Like, how about a HEPA filter in every classroom? You know, kids aren't wearing their stupid masks anyway. You know, I saw a kid today, and I do not blame the kid. And quite frankly, I don't blame the parents. I blame our government. They were wearing a mask that looked like a fishnet. Like, seriously, like a fishnet, where it's like, I mean, you're just gonna breathe right through it. It's like you're wearing something, but it's a fishnet. And again, I don't blame the child. I certainly don't blame the child. I don't really blame the parents. I blame the government. Like, how about better masking? Why does this? Let's see if the CDC still does it, and then we're going to talk about Apple. Okay, then my rant will be over. CDC masks. This just okay. I'm sorry. Okay, I get very frustrated when our government wastes our taxpayer money. What is this garbage? Look at this. Look, okay, folks, look at this. Center for Disease Control and Prevention, okay? They want to prevent disease and control it, right? Right here. Do not choose masks that are prioritized for healthcare workers like N95. We have plenty of them. There's no shortage of them anymore. Nurses are telling me, Kevin, We're back to single use for N95. We're not even reusing the N95s anymore because we have so many of them. It's just, oh my gosh, government is incompetent, absolutely incompetent. I'm sorry. I think if you are a Democrat or you are a Republican, you should agree with me that this is bullcrap. This right here on the CDC, this is bullcrap. Sorry. All right, let's talk about Apple. Who wants to talk about Apple? We got to talk about Apple. Oh, man. Oh, I got to take a sip of coffee. Yeah. All right. Let's go. All right, folks. So we've got some bad news on Apple, and this has to do with a court case between Epic Games and Apple. Let's go ahead and take a look at first the stock. Let's see how Apple is performing today, because really we had a lot of pain in the markets today. All indices red. We've got Apple down 3.31%, which for Apple, that is a very big move. I wonder if Google's following it, because Google's got a few antitrust lawsuits, and I wouldn't be surprised if you had a little bit of a shift in Google as well. Google, yeah, look at that, down 2% because of court rulings against Apple carrying over to some weight against Google, essentially. So yeah, take a peek at this. I mean, this is a sharp drop for Apple here. We've had sharp drops before, but look, 2% on something like, I'm sorry, 3.3% for Apple. That's a lot. So let's take a look at why. And Bloomberg has a full story on it right here. Apple stands to lose a few $1 billion annually from ruling. Oh, it's just a few $1 billion, just a few. Let's take a look. So what this has to do with is App Store purchasing. So remember that if you sign up for a subscription through an Apple device, Apple gets 30% of that revenue. And why does that matter? Well, it matters because let's say Apple has a Netflix app and you sign up for Netflix at netflix.com and you pay $9.99 on Netflix. Let's call it $10. If you sign up through Apple, Apple would get 30% of that. So it's kind of like Netflix is still providing all the service, right? But just because it was done through the Apple Store, Netflix would get 30%. This new ruling would make it so essentially Netflix could in the app say, hey, look, if you sign up on our website, you can sign up for $10 a month. If you sign up through your iPhone because it's convenient, we're going to charge you approximately, let's say, $13.30, right? To offset that. So anyway, let's take a look at the actual Bloomberg article on this and see what some of the details are around this. So, and this would apply obviously to games, apps, subscriptions, I mean, even newspaper subscriptions. In fact, some of you wonder like, hey, how come I can't press the join button on YouTube from my iPhone or iPad? There's many of you know that, for example, in this stream here, because we're live streaming this, there's a live chat on the side and members can chat in it. This is a great way to minimize spam. And you can only join the membership, which is like $4.99 a month, if you sign up through a desktop browser. Like you can't sign up through the iPhone or an iPad. And a lot of people are frustrated by that. They're like, come on, YouTube, like let me sign up through the iPhone or the iPad. And Google's like, we ain't paying the 30% for Apple, so screw Apple. It's basically a big middle finger to Apple from Google. So this has been something that's been an issue ongoing. So Apple has been ordered to make the most significant change to its App Store business model since launching the platform in 2008, which, by the way, I had an iPhone the day the App Store came out, which was the day before the iPhone 2 came out, which back then was the iPhone 3G, and which sounds like third generation, but that was the old cell signal. 3G was cool back then. Okay, 3G was like, oh my gosh, that's fast. Today it's like, but anyway, and it could cost the tech giant a few $1 billion annually. In a ruling Friday, a U.S. district judge said that the company must allow developers to bypass its commission on in-app purchases. That's incredible, because this is a judge going out of the way saying, hey, you know what, Apple, you've created a platform that consolidates millions of people into one store. It's kind of like, let's say you have the Sawgrass Mills Mall in Florida. You bring all these people to your mall, and all the stores inside benefit. So when you do a party or you do an ad campaign for your mall, or you hire a musician to perform at the mall or whatever, Everybody goes to that mall, and the stores their benefit, right? That's the argument with Apple. So Apple has this collected captive audience of folks. And so really a judge here has said, I don't care. You can be in this mall and not have to contribute to Apple, even though they're consolidating people in that space, right? Now, I see both arguments here, and this is touchy, but this is a really bad ruling for app stores, which is probably also why Google's getting whacked, is they also have the Android app store. Yeah, I mean, look, Apple takes 30% commissions on fees processed through the app store for bringing people to the app, to bringing people to the ecosystem. This ruling, which it could be overturned, right? It could still be overturned, so to be determined. I would expect that this will get appealed. We'll see. This includes letting iOS apps use, quote, buttons, external links, or other calls to action to direct customers to other purchasing methods other than Apple's payment system. I mean, this is like the kiss of death, honestly, for the 30% commission, in my opinion, because if I'm an app developer, which we have an app, right? We've got the Meet Kevin app you could download. It's totally free. But let's say I'm an app developer and I decide, hey, you know what? I want to, I'm going to sell a service in my Meet Kevin app, let's say. I don't know. You get the stock alerts, let's say, and it's $100 a month or something like that. If I had to pay Apple a 30% commission, well, after this ruling, rather than you just checking out with Apple Pay right there, like, bloop, oh, you've subscribed, rather than that, I could just have a little pop-up that goes, hey, click this link to sign up on my website, and then it'll redirect you back to the app and it'll get unlocked, right? That's, I mean, of course, as a business, I would do that to cut Apple's 30% out. But now I'm free riding, right? I'm using Apple's platform while making money without contributing back to the platform. So I don't know. This is a pretty damaging ruling, honestly. I wouldn't be surprised if this gets overturned, because I mean, I don't know. I mean, at what point does this marketplace that Apple has created become kind of like a public domain, right? It's a blow to Apple, but one that's the world's most valuable company. Well, yeah, of course, Apple can absorb it. That's helped investors take the decision in stride, though the shares fell as much as 3.5%. The court has affirmed what we've long known. The Apple App Store is not in violation of antitrust law, and success is not illegal. Okay, so Apple did not lose here, right? It's just one part of the lawsuit really hurts Apple. They won the ruling against Epic, but more importantly was what ended up happening to Apple's App Store potential revenue. But anyway, here's some details. Apple's adversary in the trial, Epic Games, the maker of this isn't a win for developers or consumers, says Epic. Apple's commissions from the App Store generated $6.3 billion last year, with most of it coming from in-app purchases and subscriptions. That $6.3 billion could literally go to zero. I mean, like, why would a developer share now? Why would anybody be motivated to pay Apple the 30%? Apple's going to have to figure out, okay, well, what can we do to entice people to still buy through Apple, right? Maybe they lower their commissions to 10% or something like that to still make it easy and desirable for people to use it. It's a problem. Because once people transition away to their own payment systems, why would they ever go back to even paying that 10%? Big mess. That money is what's at stake as games and other apps prepare to steer customers away from Apple's ecosystem. Earlier, Apple said it would allow developers of so-called reader apps to point users to outside purchasing methods. That category includes things like Netflix, Spotify, news, and so on. But the decision Friday means the rule will have to apply to games and other categories, basically everyone. Apple said it's too early to determine how or exactly what changes will be implemented. Gaming apps accounted for 70% of all App Store revenue. And wow, that's crazy that gaming accounts for 70% of the rev. And this is kind of like Epic Games' argument, like, hey, like, if we're selling people skins in the game for $10, let's say, why are you taking $3 of all those skins? You didn't design it. You had nothing to do with selling it or advertising that skin other than just having this domain where the app is hosted. But that's just because we're trying to provide a game on the iPhone as well, just like we provide the game on Android or PCs. It's a little bit of messy. It's a messy one. Apple made about $3.8 billion in revenue from games in 2020, most of which came from in-app purchases. But even if the ruling ends up costing Apple a few bill a year, that's still a fraction of its total revenue. In 2021, in 2021, the company is estimated to bring in more than 360 billion. Yeah, that might be true, but keep in mind, the revenue that Apple gets from the App Store is significantly higher margin than the other revenue. Remember, if Apple sells you AirPods for, I don't know what they cost now, $250 or whatever, Apple's probably going to profit somewhere around $50. Like, that's what they're going to bring to the bottom line is $50 on those, right? But if Apple sells $250 worth of commissions on games on their App Store, I mean, come on. What is that going to cost Apple? That's going to be like a 97% profit margin, right? They're going to take like $242 of that to the bottom line. So there's a huge difference there. So it's not as, I mean, like that $6.7 billion or whatever could be worth as much as, I mean, I would say as much as 4 times in product revenue. They might have to sell $25.6 billion worth of iPads and iPhones to make up for that loss in commissions that they just got burned out of. So that's very important to consider. Let's see. Yeah, that's true. This is another option. Y'all write in the chat here. It's not free writing if there's a developer fee. That's true. Maybe every developer who wants to be part of the ecosystem has to pay to play now. You know, that's possible. The judge did not rule that out. Hey, Apple could just say, look, everyone who's listed in our App Store, you have to pay X dollars per month, and they can quickly get that money back. At least some of it, probably not as much as they used to. The ruling states that Apple must let developers communicate with the customer through points of contact. This is like having a pop-up saying, hey, join our email list or go to our website to check out or whatever. The ruling ultimately means Epic's Fortnite will come back to the App Store. The game was originally removed last year for using its own payment method, bypassing Apple's fees. So this is, in essence, the judge said, like, this is okay. Like, this lawsuit between Epic Games and Apple has now essentially allowed this separate payment platform to be used everywhere. And again, that's very, very high margin revenue that just went out the door. Big loss for Apple. It's like, I think Bloomberg is downplaying this. I mean, they're downplaying. I wonder if Apple's like one of this person's big holdings or something. Sorry, that's jaded. I should take my tinfoil hat off. I'm sorry, Mark. But seriously, Apple stands to lose a few $1 billion annually from ruling. Like, even the title's like, it's just a few $1 billion, right? I made that joke earlier. Or even what they mentioned over here, where they compare the 6.3 billion, okay, not 4, whatever, to the 360 billion the company's going to bring in, right? Important differences here. And differences matter. The ruling could ultimately, we're going to come back. That's fine. Ruling is believed to mean that users would be able to make purchases via the web rather than having a competing, they typoed. Bloomberg typo. Gotcha. Competing payment system in the apps themselves. This means Epic would need to build a website to let users make purchases and include a link to that website. Okay, so that's a little bit less ideal, right? Like, it'd be nice to just in the app be able to click buy and then Apple Pay checkout. But in that case, Apple gets their commish. This would have to have a totally different link to where it opens up Safari and then reopens the app. But for 30%, developers will do that. I mean, how hard is it? You make a single splash page, click the little, you could probably still buy with Apple Pay, honestly, because it's separate from the App Store, right? And just revert right back, like have a single line of code that just reopens the app after checkout is complete, and then a message that pops up and says, thanks for your purchase. Your purchase was successful. Your features are now unlocked or whatever. Like this should be very easy to develop. It should be no problem for developers to handle. The ruling doesn't apply to the revenue that Apple previously lost. The judge ruled that Epic owes Apple for missed fees. $3.7 million. All of this for $3.7 million. Okay. Apple has argued that its tight control of the App Store helps protect consumers and prevent developers from swindling users. Interesting. Still analyzing the decision, which is 180 pages long. But the headline is that Apple's App Store business model has been validated. I mean, obviously, Apple's taking the high road to this approach here. But yeah, look, this gives you some details on what the heck is happening here with Apple. And hopefully you found that helpful. If you like my kind of perspective on this stuff, make sure to hit that red subscribe button and turn it gray. All right. Thanks for watching this part on Apple. Okay, cool. Now let's go back to what else we were talking about, which is stakes, probably. There are no earnings generally on Fridays, although we did have Fizz this morning, but usually Fridays after hours, nobody does earnings. Yeah, there are no earnings. That's not true. Coffee Holding, I don't know, some miscellaneous smaller cap companies, very small. But anyway, okay. What else? Whew. Let's see. Okay, then we have Fed accountability under fire. Okay. Apple's pretty much flat in the after hours. How are things moving in the after hours? Blue Apron, Rocket Lab, Invite, Etsy, Arrival. These guys moving down slightly. Matterport coming down about 0.5% of the afters. Affirm coming down 1/3% of the afters. Oh, sorry. There we go. Not a surprise to see some of those things rotate a little bit. Woozy, Hippo up 1% in the afters. I think Hippo's going to do great next week. This kind of sell-off, a 14% sell-off, usually calls for momentum again going into next week. Lemonade went down a couple percent today. I thought Lemonade started green, but they really dropped going into the close here. But they came back 0.76% in the after hours here, possibly following Hippo down. Remember, they kind of rubber band together. So then, what other things do we have here? Square. Square's getting cheap again. Oh, heck yeah. Under 230 is really my number for Square. Although with TA, I'd rather be under 220 or certainly under like 200. I mean, under 200 was a gift. We had that in May. I bought a bunch over there. It was great. Okay. So, Lucy Imran. Okay. All right, Stick's pretty consistent here. Let's look at crypto for a moment here because crypto's had some pain. Let's see. Okay. Okay. So look at crypto sitting on our line here. We've got a support line drawn at 45,670. It's basically right where we're floating above. And let's see if I can get the chart up on this. Well, oh, I'm sorry. I just had the chart. I mean, let me get into the day. I'm in the day. There we go. I want to go out to the hour. Okay, so here was our big sell. Look at us sit in this channel. We have been so channeled. The fact that we just dipped below it a little bit, very interesting this morning. But yeah, these are things to watch. Very, very channeled right now. I think the market is just, this was our adjustment for CPI, and the whole Ecuador thing happened over here, which drop in the bucket. I mean, their economy, it's very, very small, $27 billion. It's tiny, teeny tiny. But anyway, very, very channeled here, and dropping along the bottom side of the channel right here, going into CPI data Tuesday, folks. CPI data Tuesday. It's going to be very interesting. It's going to be a big one. So big day as well, though. I mean, some stocks did very, very well, though. Volatility sky high. Lot of losers in the day here. Lots of red. 3, 4, 5% up and down. Look at that. Whoa, look at Tesla crash into the close. What happened to Tesla? Oh my gosh. 736. Hold on. I got to see what happened over here. Tesla. All right. So do you think it's worth buying the dip on MNDY? I have no idea what that is. Why do I think it's Monday? MNDY. It is Monday. It's Monday.com. Okay. I guess that works. Well, let me first look at the news on Tesla, though. Kathy Wood sells 139 million in Tesla shares after rally. Ooh. Okay. Nuremberg for the Tesla Model S. Tesla Model X. Tesla Model S just dusted the Porsche Taycan in the Nuremberg EV lap. Wow. No particular news here. Just pain. Just pain. Epitome. Do they like Monday? Yeah, just solid. Look at that. What a drop here. I mean, just really the last hour. It's like people going into the weekend. They're like, yeah, time to take tendies. It's a big drop. All right. And a lot of stocks did this, though. Real pain here. Yeah, Nuremberg's. I wanted to go race there once because you could buy you could like buy access to it and then race around it or just drive around it. Lauren didn't want to. Like, no, Kevin, no, maybe a different time. All right, let's look at what happened with Monday. Monday.com. Okay. So, oh, look at that. Wow, Monday's had a run. Okay, so the thing must have IPO'd in June. It IPO'd right before earnings. Oh, that's interesting. $182 was the high there. 172 was the close. I mean, wow, it went up to $425. What's the market cap on this thing? Monday.com stock. $16 billion. What? What? $16 billion on Monday.com, the collaboration platform? Oh my gosh. People going cray-cray. Michael, yeah, ask in the course member Discord, and we can get you that bundle. Okay, Monday, MNDY. Oh, here we go. Okay. MNDY develops application software, team management, communication, productivity solutions. $16 billion, though? How do they make money? No way. No way. I mean, I know it's like subscription-based and stuff like that, you know. Oh, thank you. Yeah, for that, Eric. OcuGen's got had a lot of momentum. Okay, so Monday.com, I cannot believe this, a $16 billion market cap. Okay, losing money 2021, 2022. That's okay. That's expected. Massive growth for 2021. 75% projected, 44% for next year. Holy smokes, the growth projections are very high for this company. Very, very high. Are we going to be profitable in 25? Let me see. Expecting to go profitable in 2024, but 2024 price to earnings ratio here, with 2024 being first year of profitability, I mean, you're paying 845 times 2024 earnings for this company. Holy smokes. I mean, even if their EPS was $5 in 2024, 371 divided by 5, that's 74 times. That would be one of the most, and that would be 10x the earnings they're projected to have right now. I mean, I imagine they're just blowing all their money on advertising and growing, but no. There's no way. There's no way I could be in Monday. I'm sorry. There's no way. Because really, what probably, in my opinion, what's going to happen is this thing's gonna plummet. This is gonna, the market's going to realize this thing's overvalued, and next time the market gets nervous, it's going to plummet. See, it's not like, in my opinion, like Hippo. Hippo has rather than running has crashed, and that's why I made a big investment into it. Is because I go, no, this like, for what it is, fintech, the insurance innovation, why it's down, all the reasons for me on Hippo are like, no, this is worth like $3 more than what I'm paying for it. But there's no way I could hold a candle to this valuation on Monday. Yeah. So anyway, okay. OcuGen was saying, the problem with OcuGen is that one has been heavily momentum driven. Now, that's not to say that Monday is not momentum driven. I mean, maybe it is. What do I know? Maybe this last run is just all momentum. But then again, it ran after earnings. That's a very good sign, actually, that it ran after earnings. I thought the articles must have just been great. Monday.com earnings. So that was, what was it? Q2. Here, I'll pull up their investor relations. No, I have seen the run on Upstart. I know it's nuts. That I think is overvalued as well. That one's crazy. Okay, SEC filings. but it's had a very good run, and it will end. Report a foreign issuer. Where are they from? Just want to get a quarterly report. Can I not get a quarterly? News. Okay, come on. There's got to be something here. Announce the second quarter results. Here we go. All right, let's see what we got. Let's see what we got. Thoughts on SoFi and why I'm personally a fan of the company. No, I love SoFi. It's always going to be anchored because of it's a SPAC until it's not. It's unfortunate to say. That's why I'm surprised Matterport is stretched. But then again, it's stretched over $20 before. Oh, they're an Israeli company. Okay, now I understand why. So WorkOS drove revenue growth of 94%. That's year over year. That makes sense. I mean, they've just recently gotten a lot more popular. Revenue of 70.6 million. And how about margins? Let's see here. Our net user or dollar retention rate for customers with more than 10 users was over 125%. With more than 10 users. Well, what about the smaller users? Why aren't they counting those? I mean, they're doing very well. And that's the thing is I think people are pricing in an insane amount of growth for this company. Low code software, expand how Monday.com is adopted. Because you can like assign tasks and things. I mean, it's a good software. I've used it before. I just think that valuation is insane. But I'm not bagging on the company and stuff. It's not their fault. I do want to look at their financial tables though. Okay, so hold on one sec. It's easier for me to do this if I could just throw this into good notes here. Give me a sec. All right. Sorry, that's a firm. One sec. Okay. Then I can mark it up. I can't mark it up in the browser, so I always like to jump on over to something I can mark it up in. Come on. Would you open up, please? Open up, please. That's what we said in California during the lockdowns. Open up, please. All right. Come on. Give me my PDF. It ain't that hard. There we go. There we go. Now I got a PDF. All right. So what do we got here? 3 months ending. Okay, so we got revs. It's incredible revenue, 70.6 million. Cost of revenue. Look at the cost of revenue. See, this is what I'm talking about. And it's these SaaS businesses. These are money. Look at that. It only costs them $9 million to provide $70 million worth of services. Now, this I will say, this is the kind of business I like. I like that kind of business. See, you look like Bowser. That very, very good. Research and development, 16 minutes. Sales and marketing. Holy moly. $61 million on sales and marketing. Well, hold on a second here. Wait, we went positive on sales and marketing, though. That's good. Because, see, last year we did 36,460 and spent, last time we spent, hold on, 39,636 divided by 36,460. We spent 109-ish% last year, 109%. And now we've spent 61,057 divided by 76.5. That's better. Yeah, 70. And 615. There we go. That's better. So that works out to 86.5%. That's much better. That's the good trend. What you want is this number right here, this sales and marketing number, to plummet as a percentage of revenue. Like ideally, quite frankly, this goes down to like 30%. And then you really take profit to the bottom line, right? Then you start printing tendies. But you got to grow the business. So this is a money-burning business until then. That doesn't make it a bad business. But, I mean, looking at the chart, it's just insane. Combined with the profitability and the valuation, it's insane. And again, not saying that the company's bad. I love what I'm seeing here in terms of like the company itself. But the problem is, if the market gets nervous, the foundation for that stock is like here. Okay, the valuation's like here. Like it's gonna, you're gonna have your correction. That one's gonna fall harder and faster than something else. IMHO. So G&A at, I don't know, of revenue, what is that? 15%, that's normal. R&D is probably like 20%, just spitballing here. That seems about right. Are they going to dilute us anytime soon? No, they got lots of money. They had $865 million. Very good. They have like no debt. Oh my gosh. No debt. This company's very well capitalized. That's insane. No debt, credit lines, deferred revenue. Deferred revenue. They're showing us a liability. So they really have no debt. When 101 million of it is deferred revenue. That's funny. They're showing that as they're not recognizing that yet. I mean, this is a very good earnings report. So it makes sense why it ran. This is not bad at all. Stock-based compensation. Okay. Let's see. Not bad. Recent business highlights. Yeah. Number of paid enterprise customers with more than 50,000 in annual recurring revenue. That's very good. 470. Oh my gosh, look at that growth. Holy smokes. They tripled. They had 144 enterprise customers paying 50 grand. Now they're at 470. That's very nice. This is very good. Very, very good. Yes. Now we don't need the evil on this one. This one's just like happy. Yeah, we'll get rid of the eyebrows. There we go. That's good. Announced Monday work docs. Enables organizations to take document calibration to new levels. What happened to Google Docs? Introduction of work docs, significant opportunity to create no-code, low-code software and expand how Monday.com is adopted. I mean, that's not bad. That's smart. I mean, this company's doing a lot right. I'm going to watch this company. This is a company where if we get a nice crash on this one, I can see myself actually buying this. Again, not at these prices. But thank you, whoever paid money to get me to look at that. I'm glad I looked at it. I hope it crashes and burns so I can buy it because I actually am impressed. It's very impressive. Let me see Google search trends here. Trends. Monday.com. I'm actually surprised you don't have more growth on the search trends. Yeah, it's flattened a little bit. I'm surprised by that. I am surprised by that it's been channeled in terms of web searches, but maybe people are becoming more familiar with it. I don't know. That does surprise me. But hey, good job, Monday. I mean, pricing. People searching for pricing. That's too niche. Californians and New Yorkers. Of course. All right. That's good. So again, whoever super chatted that one, thank you. That was good. Oh, Ethereum dipping again. Look at that. Going back into the gutter. Hey, give me some more dips. I'll take it. I'll go place some more cash in RCC. Well, I mean, it would really just be moving it from one cash source to another. All right. So stay tuned. I mean, look, I don't care if it's 2 a.m. If I buy crypto, I will send you a notification at 2 a.m. and say buy crypto. Like if or just say that I'm buying crypto. Remember, I don't tell you what to do. That's on you. But wow. Okay. So Blue Apron, support.com coming back. See, we get a little bit of those recovery on the ones that got burned today. I expect Hippo to still do well at the beginning of next week. Again, 595. This should easily be able to launch back into the 6 range. Let me see here. Let's just do a quick hour TA. Like, I would expect it'd be pretty, I don't know. Are we going to get to this level again? I mean, it was pretty easy for us to, well, it's 687, 656. That's probably more along what I would expect. Like a 656, start getting a little bit more pressure. Right around, yeah. No, I'd have to play this chart a little bit. It's not as clear as I'd like it to be. A 620, 615 here. It's just still too early to really mark this one up. 620. Yeah, this one's going to take a little bit of love. Certainly the highs over here have been tested. Doesn't like going above 7. We know that. Only did that in pre-market. Are the course member live streams on YouTube? They are. Yes. They are. All right. So, yeah, so a lot of people watch them back 2x later. Some people just want to be there in the moment. But anyway. Cool. Oh, Bitcoin. Look at that hook. The spark line looked like it had a hook. Hold on. Yeah. Look at that. There you go. Give me some more discounts. People think I'm mad when I say that. It's like, no, like I want it cheaper. Like, why would I not? So, okay, cool. I think we're good. I think we did well. You get your free up to $70 with Public. Watch Hippo next week, but also Whitefair. Whitefair is going to be another interesting one. We'll watch crypto over the weekend. Enjoy your weekend. Check out the coupon code link down below. Enjoy your 9/11 tomorrow. Very sad what happened 20 years ago now. And yeah, stay tuned for videos. Thanks so much, folks. See you in the next one. Goodbye.